market continued grinding higher today, tagging the 595 level before slightly rejecting at the close. We've been highlighting this 600 strike. This is the largest positive gamma exposure concentration from our GEX data graph. And all of this positive gamma exposure here is really starting to become a magnet for price. We saw that today, gamma effects pulling price higher. We are above the zero gamma level in positive GEX territory. We were highlighting also this week this major support and resistance zone here at the 585 level. This was previously zero GEX at the beginning of this week. Obviously, the GEX structure has shifted higher since then, and so now zero GEX is at the 590 strike that's highlighted here by our blue line. So these gamma exposure structures do shift, and that's why you've got to monitor this in real time. And the data is suggesting that market participants are still positioning bullish. Given the recent momentum, I thought it would be useful to highlight a couple of path scenarios that we are looking at. I'm going to keep this really simple. 3 basic path scenarios, either going higher, consolidating, or breaking down. Typically, this GEX data provides us with a definable edge in the options market. And so because of that, and because of the positive gamma exposure territory that we're currently in, I'm estimating that this is approximately 65% probability that the path continues higher into this, number one, into this 600 strike here, and potentially, if momentum continues and we see gamma exposure growing at the 605 and 610 strike, could potentially go up into those levels as well into December. It's a little early to be calling for that far of a move, but I think 65% chance that we get at least into the 600 to 605 zone. For our second scenario, I'm going to apply a 15% probability that we basically just consolidate for the next 3 or 4 weeks here at the 590 to 595 zone. That would look something like that. That is a smaller possibility, in my opinion, just from the basic skew that we're seeing in the options market. Likewise, on the downside, I'm putting a 20% probability that we see a sell-off. We saw this dip after tagging the 600 strike. We dipped all the way down to 585. That represented like a 2 to 3% pullback. We still have this open gap after the election that has not been filled yet. Because of that, because of the recent dip, 2 to 3% down into the 585, I think there's a 20% probability that from this point forward, we could see further declines, maybe back into this lower dealer cluster zone, filling this gap here, and basically coming back down to the 575 strike, something like that. So that's kind of how I'm looking at these path dependencies for the market in general over the next 3 or 4 weeks. And I like to conduct these type of exercises basically to then structure option trades that can take advantage of these various path scenarios. So that's actually something we discuss in our Geek University course, which is free for all of our members. So definitely check that out if you get a chance. I'll put a link in the description below. So all that being said, I'm paying a lot of attention to this 600 strike. If you've been watching our previous YouTube videos over the last week, we've been highlighting this level, and we've been watching the volume every day coming in pretty consistent at this 600 strike, another 281,000 contracts here traded. Doesn't look like much because the bulk of the volume, of course, is going to be in the price range of today's trading activity. But if you take that out, this is a pretty significant amount of volume being, 1.5% higher than where we're actually trading.
Yeah, good points on SPY, Anthony. One observation I had today was one of those days where the gap down was an opportunity to buy the dip. And what's interesting is where we closed, you can see here the body of the candle. Well, we rejected right at that whole moving average. I talk about the whole a lot. It's one of my favorite indicators. I find it to be more effective than some of the moving averages that I've looked at in the past. So a lot of times when we stop at a resistance point, the futures market overnight overcomes, or maybe it goes beyond and then rejects it again. So, we could see some action in the futures market to kind of remove the question of whether or not we go over the line. If we do overcome that whole, I think 600, becomes a higher probability target.
Next, I just want to turn to Nvidia. Nvidia with the big earnings report last night. We've been highlighting the 150 strike with the largest GEX concentration. After hours last night, it was a little bit of a mixed picture on Nvidia, but as we opened this morning, we opened right in this dealer cluster zone, immediately rejected, and then bounced and came nearly back all the way back up to that level. So the gamma exposure data loses a little bit of its edge around earnings because earnings have an unpredictable nature to the release itself. However, in this case, the 150 gamma exposure levels seem to hold true. I do expect, even though there might be some volatility between 140 and 150, I do expect this 150 to get tagged again. Potentially even to break through into the end of the year. We see continued volume coming in here every single day at this 155 and 160 strike. And if you look, this is very significant volume, over 500,000 contracts traded both at the 155 and 160 strike. And the reason I highlight, the volume up here is because there's a big difference between volume trading in the options market where the equity markets have not traded. So you can see we never reached 155 or 160 today. We were basically between 141 and, this high here at the open, which was around, I think, 152, 153, somewhere in there. So it's not surprising to see volume here at the 140 strike or the 145 strike because we were trading there throughout the day. So of course we're going to have big volume coming in as Nvidia is trading throughout the day. But it is important when the underlying security has not traded at these levels and you have this huge option contract volume coming in at those levels. That could be investors selling out of the money calls. It could be speculators coming in buying calls. Of course, there's a number of different complex strategies that are at play as well here. And so I always like to pay attention to these kind of scenarios. And I think the 155 and 160 strikes will continue to be very important for Nvidia heading through the end of the year. So we're going to continue to watch the data coming through at those levels.
Thanks, Anthony. We had someone in our Discord group ask us about Google today. Google is down on this Department of Justice news that they're going to be potentially forced to divest Chrome. What I think people forget, Anthony, is that when a company divests a division, if it's worth something, there is value received. And I think we can all agree Chrome does have a lot of intrinsic value. So, I don't know what they'll do with the cash. Obviously, the market is for today, looking at this as a negative. You can see on the chart that we didn't quite make it to this lower Keltner channel. It does look bearish as far as the candle goes, but we're kind of right back at this general area, previous resistance that should end up being support at this point. And we do have this upper Keltner channel curving upward as well. So that's a potentially bullish sign, or at least a sign that this drop is not going to be the end of Google. And so let's take a quick look at the gamma picture. We do have positive gamma. We are a little bit below this 170 strike, but I don't see much interest below here. And we do have a very large gamma cluster at 180. And I still think that is a pretty good target looking ahead.
Let's jump over to Palantir. Palantir has been consolidating around the 60 strike here. For the last week, we had this huge run up, the last leg being from the post-election enthusiasm from 40 all the way to the 60 level. Looking at the data, though, I do see some reason for pause here. One is that we are above the largest gamma exposure level here at 60. There is some GEX here at the 65 strike. We have tagged it a couple of days ago. There's a chance we could revisit 65. However, we're continuing to see a lot of volume come in between 50 and 60. So, we are hitting a resistance level here. This is our upper dealer cluster zone. This is an area where dealers are selling the underlying security as price goes above the largest gamma exposure concentration. So every time price is above that or trending above that, dealers are selling shares of the underlying security in order to hedge. That's the predominant flow from dealers in this scenario. The only thing that can really overwhelm that is if we see market participation coming in at higher strikes. So we do see that at 65. It has not overtaken the 60 level yet. But when I look at the volume coming in at lower strikes, it just shows me that there is going to be somewhat of a ceiling here on Palantir, maybe 65, maybe 63. This range is really our resistance zone. So, oftentimes the dealer cluster zone is resistance, but when you have like these huge high flyers like Palantir, obviously it can extend beyond that. So I think our resistance zone is really a little bit above the 60 strike, 60 and 62 strike. So it doesn't mean a crash is imminent, but it does mean that, some softness is probable in Palantir. And so we're not outright shorting it, but we just highlight this because I know so many people are watching this, and we just like to analyze what the GEX data is showing us and what the volume data is showing us on a day-by-day basis. So if you guys want access to real-time gamma exposure and option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. I'll put a link in the description below. Don't forget, members also get access to our premium channels in Discord. We also have free access channels as well. I'll put a link in the description below. You definitely want to check that out when you get a chance. Thanks so much, everybody, for watching, and we'll see you guys in the next video.